Hello, my people. Welcome again. Good morning, good evening, good afternoon, from wherever you are watching from and where your time is at the moment you are watching this. Firstly, I want to thank you for 1K subscribers. You guys are the best. Thank you very much. So, I've been taking my time to work on a course, like I told you earlier. I've been taking my time to work on a big video that I can share with you guys. And remember, I also said in one of my videos that when we get up to 1K subscribers, we'll be doing live trading section. Okay, so what we are going to do now is, I don't know for you guys, so drop in your comment section where you are watching from, your time zone. So this will help me and my team to organize the time such that it suits everyone. Okay, and even if you have a $10 account, when we start this, you can flip. We can be flipping, getting 50% of what you deposit on that day. You withdraw, all the process, everything. Live trading section where we'll tell you, okay, this is the analysis, and based on this analysis, you can place your buy or you can place your sell, and put your take profit here, put your stop loss here, and we'll watch the trade go run together. Okay, so we are going to start that anytime soon, but firstly, please drop your time zone in the comment section and subscribe. If this is your first time, subscribe, guys. I don't like sharing testimony from my students, else I would have shown you certain things, because our courses are actually doing wonders. Students are flipping their account, people are turning $20 to $1,000 within a week and all that. So if you are yet to purchase our premium course, the link will be in the description below. You can go ahead. What I'm about to share with you here is a glimpse of what you will get in the video. And for my premium students who are watching this video, permit me to just share little with them for free. Okay, at least when they make good money from the little they are going to get, now they can raise money to subscribe to get the full package. So forgive me, please. Okay, so let's go right into the video. But before I begin, as you can see, the chart is neat, so I want to just show you one or two things before I bring in the indicator. So before we go ahead, I want you to also know that I do not contact anyone to send me money for trade or so. I will not, if we don't know in person, like I don't know you in person, I will not contact you online and say, send me money, let me trade for you. No, I don't do that. If you want me to trade for you, you supply me with your account details, I trade, then you give me my percentage. And so if anyone should contact you in my name and saying that, okay, this is me, you should send them money so that they can trade for you and give you in form of investment. Please don't do it. It's not me. They should be scammers, imposters. Okay, that being said, you can join our telegram channel where we, most of the time, we paste free signals, and we uh, drop some of this daily quotation and all those things. You can join. Okay, then like I said before, if you are here to purchase our course, believe me, guys, you don't want to miss. You can go ahead and make your purchase. Okay, all right, that being said, let's go down to the video. First thing first, in trading, you need to understand that trade, you can't wrestle with the market. If you try to wrestle with the market, I assure you, you are never going to win in any day. So what you do is you wait for the market to come to you before you enter. Okay, what I mean by waiting for the market to come to you is that when you have finished your analysis, for those who are good in trading, you are done with your analysis, and your analysis is telling you that this trade is going to buy. Okay, now maybe at the moment you made that analysis, the trade is still selling, and your analysis is telling you this is a buy trade. You don't just jump into it because your analysis said the trade is going to buy. You wait for certain conditions to be met. Okay, that's for that. So in other words, when trading, you need patience. I want to just bring some of these things to you because most people crash accounts based on the belief, okay, this thing should go like this, and at the end, because the thing didn't go as planned, then, or sometimes the trade, for instance, let me look for a good example for what I'm saying. I'm going to look for an example now. I think I should go to the 1 hour time frame. Okay, now look at this trade. For instance, you have a $10 account, right? Now in your $10 account that you have, you you have you saw this trade and you're like, this trade is going to buy. Now you have already saw the trade and you said this is a buying trade. Why did you say it's a buying trade? Maybe you have done your analysis and all that, and everything is telling you this trade is going to buy at a particular time, right? Now let's, for the sake of this example, let's say you saw the trade around here, okay, and because of the force, the momentum at which it's moving, you can see, you said this is a buy trade. Now you have said this is a buy trade, but you are not patient enough to wait for this candle, this current candle, to close, because in trading, even when you get confirmation, that candle that gives you the confirmation has to close so that you will know exactly if that trade will go that direction or not. That might not be a good example, but this is a perfect example, as you can see here. Now this trade was coming downward, like, let me zoom in, let me zoom in so that you can see it very boldly. Now this trade was coming downward, as you can see. Now while it was coming downward, what happened? There was a spike upward. Now because of the momentum at which this trade was coming down, I might say, this thing is going to sell and it's going to form an engulfing candle, just like what happened here. This is, after all, this is the same pattern that is here now. Now, you might not be wrong, but you might be wrong, because just because the market did something like that here doesn't mean it will repeat itself. Most times, repetitions do happen. However, what I want you to know is this: the market, if that is the case, then you have to wait for the current candle that you perceive that is going to repeat this process. You have to wait for it to close. Now, if you have not waited for it to close, and let's say you entered the trade around here and the market was just pushing down for you, and you were expecting that once this candle close, then the second one will also close like this one, and the moment the second one close, then you will now take your profit, because you perceive that that is when there is going to be a reversal. However, and unfortunately, from what you can see, the candle didn't close before pushing back and giving us this hammer or pin bar, right? Now with this, you should already be at loss. Then this one came and encouraged you. Most people will say, okay, no problem. Now at the end of it, what happened? This one might not go down because of this pin bar here. Okay, so this trade might literally begin to push up. However, now the reason why you will be a victim of such is because you lack patience. You didn't wait for the candle to close before you make your trading decision. So patience is important when trading. Then number two is that when trading, you should focus on your risk more than the reward. I'm going to explain what I mean. Now, when I say focus on the risk more than the reward, you are having $100 account and you are about to place a trade. Now all you are seeing is, if I place this trade, and maybe because of the strategy, you have tested the strategy over time and the strategy is on fire, it's working very fine, you have tested it over 50 trades and 45 out of the 50 entered and only 5 failed. Good, that's a good strategy, right? Now that same strategy that you are so happy about, what you are not putting into consideration is, if inside that 45 trades you made $1 from the 45 trades, it means 45 trade profit will be $45. Now if your profit is for $55 for 45 trades, then you come over to your $5 loss. And maybe because you were trying to follow ticks, because most videos you see online will tell you how to follow the ticks, catch 5 candlesticks, use a big lot size. Now if you are using a lot size of 5, and you are following the tick, maybe you want to catch 5 candlesticks, because 5 lot size is equivalent to $50 if you get five candlesticks successfully. However, most people, out of because of their treasure slot, they don't sustain the patience to wait for that 5 lots. Okay, so let's even assume you were patient and the strategy worked. You made $5 per trade and you were able to succeed in 45 trades. So 45 times $5, that's good money, right? That should be around 100 and something dollars. Now, what you are forgetting is that a single spike against you can also give you a loss of that 100, just one. So that is not a good risk management. So when I mean focus on your risk more than your reward, is because your risk is what keeps you in the market. You want to remain in the market for as long as possible, right? If you lose all your money, then you are out of the market. You may have to refund or quit. However, if you have good risk management, for instance, before you place any trade, you say, okay, what if my analysis is wrong? How much am I going to lose? Forget about how much you will make first. Focus on how much you are going to lose. So now, if I am having $100 account, so my account is $100, right? And in this single trade, if it should go against me, I'm going to lose 20. So it means my equity is going to remain uh 80, right? $80. Now, okay, now I know that I'm risking $20 in this particular trade. Then I need to look at the potential of that trade. Like, okay, since I'm losing $20, how much will now be my reward? Because if you don't focus on your risk first, you will not know if you are about to enter a profitable trade or not. Imagine a trade where you are likely to lose $20 and the outcome, if you go for you, is just $5. This is a very bad trade, very very bad trade, because I cannot risk 20 to make 5. That is very poor, very very poor. So knowing how much you are risking will now make you to determine, okay, I'm risking $20, so I should make not a minimum of 40, or at least $30, which is 1 to 1 ratio 1.5, right? For this one, it means that if I lose, I lose 20, but if I win, I win 30. At least I'm still on the winning side. Now, because you have known your risk, if that trade does not sustain the potential of giving you 30 or $40, what do? You avoid it. So you see why you need to focus on your risk first. Most times you can even have up to 1 to 3, which is $60, right? So when you focus on your risk, you will know if the trade is going to be a profitable one or not. Now, if I enter 3 trades, it means that I'm going to be losing $60. I'm risking $60 out of 100. Now, if these 3 trades should enter on a ratio of 1 to ratio 3, it therefore means that I'm going to have, which is 60 times 3, 180, right, as return. So I will lose 60 if the 3 should go, and if your analysis is correct, there is no way you can just lose the 60. Now let me still show you something, that why you should also focus on your risk first. Now, if out of the 3 trades that I take, if 2 should be bad, right, 2 didn't enter, and one entered for me, okay? Now, this one that entered for me, remember the 2 that lost, each single one is minus 20 multiplied by 2, so that would be minus 40, right? I will be losing $40 if two trades should go against me. Now, I'm placing three trades, so two lost, and I was able to profit one, which is $60. Now you can see that if I should subtract 60 from um, 40 from 60, I'm still on a profit of $20. Okay, so it means that out of three trades, I just need one to be profitable instead of all of them. So I don't have to strive for all the trades to enter for me. I only strive for at least one out of three to enter, then I will be on profit. Is that true? Yes. So you have to focus on your risk first before your reward, because your risk will not determine your reward ratio, and your reward ratio will determine if the trade is going to be profitable or you should avoid it. Okay, just because you saw an opportunity in a trade doesn't mean it is profitable. It might not be profitable, so you avoid it. So that's another thing I want to bring to your notice. Risk, your risk what management, risk to reward management. So you must focus on your risk before you think of your reward. Okay, so having said that, now let's talk about emotions. Literally, there is no way your money will be somewhere you are losing money and you'll be happy. But this is where risk comes in. Risk management is necessary because it kills emotion out of it. Okay, now let's say you place a trade and this trade is going to be minus, let's, okay, you reduce your risk, so minus 10 or even minus 5, and because you know that, okay, if this trade should go against me, I will be shorting $5 out of my account, which means my equity will remain 95. But if it should go for me, I will be having $15. It means my equity will now be 105, right? Am I correct on that? Yes, 105. So what then do I do? How then does this help your emotions? It helps your emotions in the sense that you already know how much you are losing even before you place the trade. So you say, okay, your mind will be at peace, knowing, because your mind has already programmed it that you are going to lose $5 if things go wrong, and you will win $15 if things go right. So for that purpose, because of that, what happens is that your unnecessary pressure of your emotions will be out of the trade. So what I mean is this: if you place a trade, let's say you place a trade, no stop loss, you don't know how much you are losing also, and for some of us who do have internet challenge, most of the times your internet tripped off. Now the challenge there is that you don't know how much you are going to lose if the trade should go against you, so you'll be panicking, your heart will be on at a state of unrest. Why? Because you don't know how much you are losing. You don't know if the trade is going for you or is going against you, and if it's going against you, has it blown your account or has it taken up to half of your account? These are some of the mistakes that I've made before, and that's why I'm bringing it to your notice. And these are some of the things you will learn more in details with good examples in the market when you purchase our premium class. Okay, the link is in the description. Go ahead, purchase it. And one of the advantage of getting that class is that you have a lifetime mentorship and you get to place trade daily with us. Like as we are trading, you are trading, we tell you, we give you the conditions while we are placing the trade, we analyze the chart, and we give you signal as our student while you are getting yourself, you are mastering the chart, and you can at any time ask us your questions, check the chat. If you have confusion, of course, send it to us and we will answer swiftly and almost immediately. Okay, so back to the video. So you need to know that risk management will help you reduce emotional damage, because sometimes trades can really take your emotions very, very high. That is because you don't know so much uncertainty. Now, like I would say, if you are overly afraid in the trade you place, two things are involved. Either you have used outrageous lot size, or you did not use proper risk management. These are the only two things that will make you to what have heart. Your heart will be pounding very very high when you are on trade. Okay, so but if you do the things that I just explained now, it's going to kill all those things out. So you not have any pressure, knowing fully well that okay, this is what will happen if things go wrong, and this is what will happen if things go right. All right. So now let's begin our analysis. Firstly, I want to show you a price action system why you can trade without uh, any indicator on the chart. However, I'm going to drop an indicator towards the end of this video. So anytime around this video, I'm going to drop an indicator for you, which has been tested, and you will see the magic. As I showed it to you, you will see the working of this indicator. And so keep watching, don't go, and please don't forget to subscribe, don't forget to like this video, and don't forget to share with your friend. Help us to grow our YouTube community. Okay, all right. So now first and foremost, I want to check the chart. Let's see what has been happening in 4 hours. This is what we call top to bottom analysis. You have to check higher time frame to see what's going on, then you come to lower time frame to look for buying or selling opportunity. Now if you come to the higher time frame, you discover that this is the point the trade has been, and at this point that this trade is, the trade firstly pushed up, which you can see, and there was a rejection here. And that rejection, if you go back again, you discover that this is not the first time it's been rejected. So literally this point is a strong resistance zone. Right now, this trade having pushed up here, what happened is that it returned, and when it got here, it started going up again. Okay, so it was rejected here, so it pushed down, and having pushed to this point, it started going upward again, which we can see. But at this moment, it couldn't get to this line, right? So it stopped here. Now we need to find out why it stopped in that particular point. So you have to go back to see what has happened. Now if you come back, before we go back, I want you to see that when the market came here, it tried coming down again, and it went back. So the whole of this place is actually consolidating, right? There is kind of consolidation happening around this point. Now this consolidation that is happening, if you look closely, if we go back to 1 hour, that's the whole of that place is what you are seeing here. Okay, that is everything you see here right now, the whole of this part, right? That's that consolidation you see. Now in the lower time frame, you can see that in this 1 hour time frame, you can see something here. This is a double bottom formation. Okay, so the trade actually had a double bottom formation, and also you need to know that some of these patterns that we talk about is already in our course, so you can buy it. There are several patterns in the chart that when you see them, you already know where. There's no need for so many analysis. When you see such patterns, you know where the market is going. So this is a double bottom formation, right? The market came and returned, then it came again, and what happened? It returned, right? So if you notice, this is double bottom. However, someone might be saying, but this one came outside. Yes, this is what we call fake out. This literally can cause trouble for so many people, because now you have say, this trade has broken out of this point. Remember what I said, always wait for candle to close. Now in this context, this red candle came below and closed, right? Now when it closed below it, you might be tempted, but you also need to wait for the next one to give you confirmation. This one has closed, this one has to give you confirmation, and of course you can see it the one that is supposed to give you confirmation, what happened? It just pushed up, piam, and you can see what happened there. Okay, so now it's now forming little consolidation here, right? Now this little consolidation that is forming, how do we know the direction this market will go? Will the market sell or will the market buy? Well, there are a few things you can do to know. First, check the pattern that this market has formed. We have this long upward, then we have this part, and we have this part. Now this looks like head, head, then shoulder and shoulder. And anytime there is head and shoulder formation like this, what you need to do is to wait for the neckline to be broken, right? Now our neckline is going to be this zone. Okay, so you can see that when the market came, it returned. Okay, the market returned at this point. At this point, the market faced a return, this arrow here. Then this one was coming again and it pushed back. So in order for us to enter either sell in this market, we have to wait for this neckline, which is where the market trade is currently. This place I drew, we have to wait for it to what? Break out. And when it break out of it, we'll now wait for a little retest back to that line, and we'll now see a rejection. That is when we'll be sure that okay, this trade truly is going down. If that does not happen for a long period of time, even sometimes for hours, the trade might just remain in this place, might just remain here, forming consolidation. Okay, so for this trade, we are here to get confirmation as to where it's going. So you can also go to the 15 minutes to check. Now if you come to the 15 minutes, you now see things a bit clearer, and you can say okay, this is what the market is doing right now, and there is resistance at this point. That's why the market, all the spikes you can notice has not crossed this point. I think let me just put a line there for us to see. So you can see all this spike has not crossed that point. That's because there is resistance at this zone. Okay, so and it's facing challenge going down because there is also support at the bottom. So that is what causes what? Consolidation, when your trade is stuck in between support and resistance. All right, so that is for the naked chart. I know some people who are new to trading might not understand. If you want to, you can go and get the premium class, premium course, and everything will be explained from beginning, and detailed examples will be given. So now I want to give a simple way for even a beginner, that a beginner can even use to trade. Now what are those simple ways? We are just going to go to 5 minutes. You can do this in any time frame, but the reason why I recommend 5 minutes is because it will give you closing and opening of candles more often than others. Okay, 5 minutes. Now when you are in 5 minutes, the moment you have a spike, okay, don't screw back, just remain at where you are. And this was the first spike we have. This was this first spike we have here. Okay, now assuming this is where we met the market, this is the first spike we have. Now this is the spike. This is a spike right here. Okay, so now we have a spike there. What you will do is this: the moment you have a spike, just take your trend line, okay, your trend line, and draw from where that spike started. Just draw it inside your chart. Okay, I'm going to just extend it. Okay, so from where the just draw it inside your chart. Forget about, remember all these other candles has not formed, assuming. So now you draw it inside your chart like this, then you wait. Now what you are doing is every time there is a spike, as you can notice, every time there is a spike, because remember we are working with this, right? We are working with this now. So every time there is a spike, just draw your trend line like this inside it and wait for the market to return to that place. Now, every time there is a return to the market, there is going to be another spike because it's trend. Now, if there is no spike, what you do is the market will go below your trend line. And I need to say this, trend line cannot be like this. This is too sharp. Your trend line should have like what you see here. You see this one? It has a sharp, at least that's how your trend line should look. Your trend line should not be too pointy like as though no. So now you can see that every time the market comes close to your trend line, there's a spike. A spike takes place, right? Every time you see spike here when it returned, and when it tried to return again, there was another spike. And of course, you can see what's happening. So the market is still spiking, and it has not broken out of this your trend line that you drew. Now remember that we drew this trend line not knowing all these other ones has formed. So let's say this is where we met the market. We met it at this spike. All you need to do is to draw your trend line and wait for the market to start what coming. So let's take for another example. Let's look for another example. Now there was a spike at this point. Okay, let's say this point. Let me take it back. So there was a spike. So I'm going to just pick my trend line and draw. Okay, so I've drawn my trend line and I'm waiting for a spike. So I'm waiting for the market after spiking upward, like you can see here. So I want it to return to this zone, and then before we now place my buy, right? So what happened? The moment it returned to that zone, it actually spiked up, right? Now what happened next was that the moment it broke out of this my trend line that I've drawn, you can see, because when it came this time around, this is very important, guys. This time around, remember, I will be expecting to place another buy because I expect that when it comes to my trend line, it will push, right? Now when I place my buy, I will put my stop loss below my trend line. Why? Because if it break out of this trend line, it means that it has changed direction. So instead of just giving me losses, and imagine if you ride all this one on loss, so it's not a good way of trading. So I will just put my stop loss below the trend line, and the moment this spike didn't happen and it hit my stop loss, I'll be out of the market, and all these other move will not count loss for me, right? So you can see that this is a very powerful strategy you can employ, guys. I'm giving it for free. It's part of our premium class, but I'm giving it for free, so you can use this for your trades. Once you see any spike, it works in any market. Let's go to boom boom 1000 now. Okay, so this is boom 1000. Remember, boom 1000 spikes downward, right? Okay, so now all we need to do is to look for where there was a spike and draw our trend line, right? So how do we draw the trend line? Do we draw it upward or downward? So I pick up my trend line. My question now is, do I draw it like this, or I would have to draw it the other way around like this? So firstly, I will have to draw it like this. This is the correct one. So the moment there was this spike, what I do is I'll pick up my trend line and I'll place it where there was the first spike, which is this one. So I will just remember that we are assuming that this other part has not been formed, so you might likely have something like this. The moment there was this spike, right, you have something like this. Then you are waiting for the market to return to that zone, and of course you can see what happened. The moment the market returned here, right, it dropped again. So we would have picked all this long spike if we have entered. And remember, your stop loss will be very small. So even with this trade, you can use a big lot size. You can use one lot size, knowing fully well that your stop loss will not even be more than 5 candles, or at most 10 candles. So if you are using one lot size for crash 1000, it means that one candle will give you 50 cent loss. So 5 candles, you will be losing $2 from your account. And if this spike should go for you, you can get up to $50. That's profitable, guys. That's what I'm talking about. So you set your stop loss above the line like this, and when the market return to that point, of course you can see what happened. There was a long spike, so we waited. Let me delete this other one so you don't get confused. So we waited for the market again, and this time around, when it came to this point, of course, it came again. At this point, we are expecting that okay, it's going to spike, so we place our sell again, and we put our stop loss above this point. And you can see the moment it didn't spike, it will just close us out of the market. Instead of giving us all these plenty losses, we would have been out of the market with minimal loss. And the moment there was this retest, this is, remember that this our trend line has now become support to the market, and the market came back to retest it, like, which was this spike, and started moving upward again. So if you are following both ticks and all that, following the direction of the market in whatsoever it's going, you should have known that this is a buying market, so you follow accordingly, because it has broken out of your trend and it has given you a retest. I'm not going to say much so that I will not be cheating my premium students. Okay, so that is for that. All right, and so I think I've said enough. This is just an appetizer, a tips of the iceberg compared to what you will have in the premium class. Okay, so but I believe this video has been profitable, has been helpful, the information in it. If you apply it accurately, I assure you, you will make good money, right? Okay, so and you won't blow account no matter the lot size you use, but don't use a outrageous lot size, because just because I said no matter the lot size you use, you go and use a $5, a five, it won't even allow you, permit you in the first place. But let's say you have $100 account and you are using 5 lot size. Now if your stop loss is 10 candles ahead, and you are expecting the spike, and probably you came at the point where the market didn't want to spike again, because there are scenarios like that which I will still show you. What happened is that you will have to lose that 10 candles. If you are using 10 lot size, 5 lot size, one candle will be $2.5. You see that, $2.5 for one candle. That's 5 lot size. It means that if you multiply 2.5 by 10, you are losing $25 already out of your 20, out of your 100 trades. However, if it spikes for you, you can be making up to 200 passing this long spike. But what if it doesn't spike? So you can use one lot size and reduce the risk. Make sure your stop loss is very tight, probably 5 candles and all that. Okay, so that's it for this video. For all this, I'm not going to say much again so that my premium student will not be cheated. So I'm just going to give you the indicator that can help you to, if you don't know how to draw trend line, you will learn inside the premium video as well. But I want to help you, I want to give you an indicator that can help you for this stop loss, this trend line and all that. Okay, so what is that indicator? Of course, many of us know how to insert indicator by now. Click on the function, right? So when you click on the function, you click on the F here on the main. So the first indicator I want to apply here is the moving average. Okay, moving average, and it's going to have a period of 10, and you can of course apply shift is 0, apply to method is exponential, apply to close, choose your color. Usually use blue or black because my screen is white, so that you can use any color that suits you. Okay, so now I'm going to just click done, and you see this line running in my chart. All right, So now the next indicator I want to add is also a moving average, and it's going to be here. This strategy is just so awesome. So firstly, just come over and change it to 100. That's all you need to do, and just change your color, probably red also. Don't change any other thing, then just click done. Okay, so these are the only two indicators you need if you want to for this strategy. Okay, now how do you use this indicator? Firstly, this your 10 moving average, 10 period moving average. Every time there is a cross like this, remember this is 5 minutes. It means one candle is five candles in 1 minute. Okay, so every time you see this curve in your uh, 10 period moving average, you can take a buy. Okay, take a buy immediately, and you can leave the trade until it's approaching this red, which is your 100 moving average, because this 100 moving average uh, work as support and resistance. Okay, so when the trade is approaching it, you exit the market. Now when you exit the market, you will wait and see if there is going to be a reaction from here. If there is none, like there is a cross here, you enter another position. So the moment there is a cross, you enter another position. Okay, now let's take it back so you can see what I mean. Now at this point, you can see that there was, of course, condition met here, and you followed and ride until it touches this. Don't allow it to touch. When it's getting close, maybe a candle before the one that gets close to it, just close and exit the market. Okay, so now you can see that when the market was spiking down, this now stands as support to the market. It came here and pushed it. This one tried to break out of it, formed a little consolidation, it rejected it again, came and pushed it back. All these are because the moving average is standing as a support, and even when there was a spike here, you can see, until there was a complete breakout of it. Right now, when it returned back to the moving average, you can see that the moving average, this 100 moving average, didn't respond to this long move. That's because the market is still trending up as far as this moving average is concerned. So you can see that when the moment is spiked, and remember that you enter the trade here probably at this second candle, and you closed with this, or for safety you closed on this. So this is 1 2 3 4 candle. That's 20 minutes you have been on this trade. That's good money. Okay, now you waited for another 10 minutes to see if there's going to be a pullback, and there was none. So the market crossed this moving average, allowing the moving average to cut through this 10 period moving average. Right, you placed another trade when this remember, you don't place trade inside the candle that just crossed, because you don't trust that candle. You place trade in the next one. Okay, so you place trade in this second candle, and you were just riding the candle. How do you close your trade? You will close this trade when there is a spike below this 10 period moving average. If the spike is below, believe me, there is going to be another spike. You can see that here when this spike came and it was below, it was only a matter of time. It was not even long, and this long spike came. So if you have a spike below this your initial spike, and below this your 10 period moving average, just know that another spike is coming. Okay, so you can just exit the market immediately you see that. Now you can see that when this spike came, it was the moving average was still below the trend, and when this one came, it was above the moving average. So it means that the market is still going, so you can hold your trade and leave it, and even enter more positions. When you see things like this, you can enter more positions, and you would have followed it to this point. So when you see a spike and the spike is now below this moving average, you immediately exit the market. Is that okay? So I believe this video was helpful. And this strategy that I just shared with you was useful. Now you can see a good example here. There was a cross, right? And the trade literally moved upward and upward and upward and upward. Now you would have exited this market here the moment you saw this spike, right? You would have exited this market immediately. Now when you exited the market, you now discover the market didn't spike down, rather it continued. What you do in this kind of situation is you wait for another spike. So because you don't know if the next spike is going to be longer than this one, so you have to wait. And when the next spike came, it was not below the candle, then you can place another open position here and follow it, and you just put your stop loss below. Now you need to know that in crash, if you place stop loss in the direction of the crash, it's not your trade is not going to stop here if the crash didn't stop here. So if the spike stopped somewhere here, your stop loss is going to be here even though you set it at this point. So take note of that. But it's also good you set stop loss so that you don't incur much losses. So you would have seen that you have gotten this, and as the trade is going, when you come to this point again, you exit the market and you wait, then you enter again when this one happens, then you keep going until you now finally saw this, then you exit the market and you wait for the next spike. It was below, you don't enter, the next one we don't enter, so you just avoid all this place completely. And of course you can see reversal happened. And when the trade spiked below this 100 period moving average, crossing this one here again, just place a sell, it's going to spike. And you can see what happened. It crossed with this candle and there was a spike, it moved up, there was a spike, moved up, and there's spike before it crossed above it again and again. So let's test this strategy on volatility. So let's say volatility 75. This is 75 1s. Let's see if it works. Okay, so you can see right here this moving average was already respected. So if you were following, you would have probably entered the trade around here, right? Around here. Now when you enter the trade around here, you expect that this one is going to stand as a resistance to it, so you exit the market. However, it didn't stop it. So, and our advice, if you are using it on these volatilities, what you do is instead of exiting the market, just put break even as your stop loss. Break even simply means you will place your stop loss at your entry point. So the point at which you entered will not become your stop loss. So if the market is returning, it's going to be 0.00 loss, not minus. You will not make profit, but it will not take anything from your account. That's break even. Okay, so you can place your stop loss at break even if you are trading volatility, right? So if you have done that, of course, you see you would have still been able to get all this. And when this market return, you see it touches, came to the moving average and it returned again. So the moving average, and at this point, when it came out of the moving average, you would have exited the market. Remember, you would have closed the market, waiting to see what will happen, if it's going to cut, because if the moment it crosses this one, the trend has changed. So we waited and you discover that he entered back again. There was a cross here, so you decided to follow. And of course you can see this was where the trend now changed. So how do you know the trend has changed here? Because when it came out of this long candle came out of it, the momentum at which it used to come out, it came back, and of course you can see there was retest and keep going, and the moving average keeps working as a support until this market moved up, 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 and when it cuts through this one, it just moved up and now it's trying to come down again. Okay, so you can use it literally on any pair, but my personal advice will be this: when you are trading, do not try to, I have seen people make this mistake, and I think I should just use this opportunity to correct those who are following my channel. When trading, do not try to trade all pairs in a single day. Okay, you can dedicate yourself to a particular pair and just trade that pair for that day. What do I mean? If you say, okay, I'm going to work on crash 300, right? So you open crash 300 and you observe the chart. Okay, there was a cross here, so, and it keeps spiking and coming, going and coming, so it's forming a series of lower lows and lower highs, right? And this one came up and also entered just like that. So now, assuming I said, okay, I want to trade only crash 300 for today, I can trade other pairs if I want to, but my primary focus for today is crash 300. So that alone will make me to stay on crash 300 and catch every single opportunity this trade has to offer. I will not miss any trade because I am here with it. For example, look at this, look at this. There was a spike at this point that came below this moving average, and remember what I said: when there is a spike below it, there is going to be another spike. And of course, you see what happened. There was a spike downward, right? So if you are on this single one alone, you will see all these opportunities and you'll be getting familiar with how this particular pair move, right? How this particular indices move, compared to you check this one, you say, okay, no condition is met, you jump to another one, you look at it, say, okay, no condition is met, you go to another trade, you check, you are just checking and looking for a condition to be met for you to place your trade. If you do so, you might not catch any particular trade because you might be meeting certain trades when the condition is already over. So please stick to one particular pair per time. When you are done catching enough spike or trading enough, then you can decide to say, okay, fine. Now look at this. For boom 1000, you see that this moving average is standing as support when it comes to catching spikes. So you see here, you see when they came to this place, spiked when it came. So even without you drawing your trend line like I drew mine here, what you do is that once the trade is approaching, you have to wait. If you want to catch spikes, this is what you do. Okay? This is what you do. You wait for this chart. You wait for this chart to climb up above the red line, which is your 100 period moving average. Before it will be above that period moving average, it is already above the 10 period moving average. So probably you would have even entered the trade, because anytime you see a spike above it like this, the next candle might likely spike. All right, so now, but a short spiking time is when it crosses the 100 period moving average. So look at this, look at this. When it came, it spiked. When it came, it spiked. When it came, it spiked, right? So and of course you see the same thing here, spiked. So you can use this as a system. This line can now stand as your support or resistance. Let's take it back, and you can see when this spike was above the line, you, of course, it came again and it spiked. It came again, it spiked until there was a breakout, right? So you can use that. And of course, the same thing applies to if you are following the ticks. When it crosses, you see spiked. And one thing you should know is that, remember, I know I just said once you see a spike that is above this your 10 period moving average,
you should exit the market. Okay, but if you have entered from somewhere here and there was this spike, as long as it has not gotten close to your entry point, you can be patient. The reason why I say you can be patient is because the trend will only change when it's above this one. So there is every likelihood that if there is a spike that is still below the 100 period, it will still go down. And that was what we saw here until this point. So the moment the spike is above it, there is nothing to wait for again. Just exit the market and place a buy. So if you follow this rule, you will make money consistently. And again, you can use 1 minute. Okay, so let's see 1 minute. We have been using 5 minutes. Okay, so this is 1 minute, right? So in 1 minute, let's see how it works. In 1 minute might get you confused. 1 minute, actually, you can see here. You can see here. Okay, you can see that when there was a cross here, the moment there is a spike and it was not above, it went down until it was above here, and of course you can see now that there was a very long spike. Okay, so for the 1 minute, when you are following the ticks, you have to be careful because a spike can come at any time, and it can, when the spike comes, it can knock you hard. Okay, so in order to avoid that, just stick to the 5 minute strategy I've shown to you. That one is safer by every standard. Okay, that one is safer by every standard. All right, so that is it for this video, guys. I hope this video has been helpful. So don't forget, we do account management, a system whereby you fund your trading account, you give us trading access, we trade for you, and we share profits. We also have a premium course, which the link will be dropped at the description box. You can, of course, go ahead and learn some of the strategies that we use to make the market every day. You can join our Telegram channel to get updates and all that. Of course, like now, a quick disclaimer: do not send money to anybody claiming to be me on the internet. Okay, they might be imposters or scammers. And lastly, don't forget to drop your time zone so that we can use it to get a proper time that will be convenient for everyone for our live trading session. All right, and if you have challenges in your trading experience, please drop them in the comment section. Let's see how we can help you uh, to improve your daily trading ability. So thank you very much. Don't forget to subscribe, don't forget to like this video, and don't forget to share with your friends. Drop what you think about the video and watch this video over and over again until you master every detail that has been dropped inside. Let me just show you something I noticed now. Remember I said when there is a spike, draw a line. So this spike, I could have drawn my line like this, right? I could have drawn my line like this. Now if I have drawn this line, okay, remember this one, I drew this one and this one has been respected. So this one didn't even touch the line. So there is need for me to draw another line since it didn't touch the previous line. And you can see what happened when the market came to the line here. It pushed up. So you can see the power of what I'm teaching you. This is part of our premium course. This is just one amongst others that we are using to get accurate results in the market. And believe me, guys, if you purchase that course, you can never regret it. So thank you very much. Remain profitable in the market. Share your thoughts with us, share your challenges so we can help out. And if you have anything to recommend to us, feel free to recommend and feel free to air your opinion for us to improve, for us to serve you better and for us to also help you. Okay, all right, till I bring another video to you guys, I remain profitable in the market. Apply proper risk management. Don't blow your account. If your account is small, $5, $10, you need to watch my video that talks about never blow account again. Look for it inside this channel. Never blow account again is the title of that video. I explained how you can avoid blowing up your account if your account is small or big, how you can avoid it, what to do, the lot size to use, and all that. So look for it, watch it, and remain profitable. Shalom.